Joined by our Sreesankar, Head of Institutional Equities at Prabhudas, Lilladher. Sreesankar, many thanks indeed for joining us. How are markets positioned right now? What do you make of it?
We think it will be much more of a range-bound market right now because at 7,800 it was looking probably it had got sold off quite a lot. Right now the market bounced back from that downward pressure, and I think it will be much more range-bound ahead of expiry, and also looking forward to probably in the next 2 weeks when the first quarter results, especially when the IT results starts to come in.
If you look at the rollover data, Sreesankar, and that's the point that my colleague was just pointing out, there isn't any indication that investors are going long at these levels, are they?
See, let's keep figuring out again rollover. We need to find out and what's happening on tomorrow when the rollovers are completed. So let's keep our fingers crossed, because the reason is when there is an uncertainty that you see, I don't think you will see a large amount of rollovers which will keep happening. Probably it will start to happen only during or the last day, etc. So today the market has just started. So let's wait and see what happens tomorrow.
What are the big triggers that you're watching out for from here on, Sreesankar, from a directional standpoint? What are those triggers that will define the direction of this market from here for the next couple of quarters?
See, Q4, it disappointed in earnings. Let's look at what happened in earnings on a more micro perspective. In FY15, in May 2014, the analysts' expectations for earnings for the Nifty was somewhere around 465 rupees. Actually, when by FY15 results came out, the earnings turned out to be 389 for the Nifty. If you adjust it for the two one-off losses came in, that is Vedanta, Kane Ka share, and Tata Steel one-off write-off. If you adjust it, the earnings came to 411 rupees. The growth is hardly 1% over FY14, which means that you never saw an earnings growth. At the beginning of the year, you are expecting an earnings growth of closer to 14%, which turned out to be 1%. Now, FY16 earnings for the market has been somewhere around, again at around 487 1 month back. I think we have already seen a roll down in terms of earnings expectation to 464 or 467 rupees.
Right.
What is key is, if first quarter earnings do not happen and earnings are not better, then the pressure on the market to have these earnings come in Q2 or probably Q3 and Q4 is going to be extremely high. That's going to be the challenge. IT disappointed. There were profit warnings in first quarter. And are we going to continue to see these profit issues coming up in Q2 as well? Then that's going to be a concern.
Okay, so let me push that point a little further. From whatever we've seen so far, at least when we speak to managements of companies, there isn't indication that there isn't any indication that you're going to see strong bounce back in earnings in Q1. Is there?
Again, let's take IT itself. You know, the companies which has actually come and given a profit warning, a couple of those companies have continued to say that it will take at least couple of more quarters for them to see the earnings back on track. So some of those companies, I still believe that Q1 will be soft. So that market has already discounted. You mentioned about Persistent being down 7% today and ahead of profit warning. So the stock is also, if I'm not mistaken, has underperformed the broader market quite a lot.
Right.
So that to a great extent is already there in the price with today's fall also. So now that's where we are looking at how these things, entire things shape up from Q2 onwards to a great extent rather than in Q1. But how the market is going to take it is going to be key.
The other aspect is capital flows. FIIs, for instance, have sold 12 out of the past 16 days in the month of June. How do you expect capital flows to sort of come back in the immediate future, or do you think that it's going to be tepid?
See, it's again a capital flow. There are two factors here we need to focus on. One on capital flows. I strongly believe that markets direction is going to be determined to a great extent by the international money flow which is going to happen. Now, if you're going to see the risk premia in the emerging markets which increases quite dramatically, then you're going to see outflows happening from the market. I don't think India is exempted from there. So you run that particular risk, number one. Number two, on the global liquidity flow, are we going to see a tightening of global liquidity, or are we going to continue to see liquidity remaining in easy for the next 3 to 6 months? I think the second, the latter is more possible. So if that's the case, I'm not worried about a sustained outflow of money from emerging markets. But it's only a matter of which market it's looking better, whether it is India, China, or some of the Latin American markets or South Africa, etc. So now, if we start looking from that angle, your relative growth being higher, if the domestic economy starts to do much better, I'm clear that the flows into these markets will be on the higher side. Okay. So the key is how the domestic economy is shaping up, and that's going to be the key.
Okay, so if I hear you right, and if you're saying that this is going to be a period where markets are going to be range bound, and it's a phase of consolidation, what would you do? Would you wait on the sidelines on holding cash? Would you go buy some of these sectors that have sold off significantly? What would you do?
We will definitely go and look into some of these sectors. We like IT. We are not underweight IT. We believe that IT demand environment is actually looking good. Now, given that some of the companies are facing headwinds in terms of certain client issues, which probably will result in a soft quarter for them, as an industry, we continue to believe that there is a tailwind in terms of even a currency slightly depreciation vis-a-vis March 31 exchange rates. So that's going to be positive for this, and we are optimistic on it. We recommend investors to be overweight that particular sector. Second, on the financials, we continue to like financials. Financials is our view is, if you're going to be bullish on this economy, be invested in the financials. And our preference continues to be on the private sector banks, especially. And the reason is, we believe that the problems of the state-owned banks is not yet over. You continue to see pressure coming in and from the restructured accounts, etc. So that issue will continue to remain as an overhang. And for best part, PSU banks, with the exception of probably SBI, will remain as trading place, and it will remain as trading place where the money for long term will actually go into private sector banks led by HDFC Bank. You may not see a great kicker in terms of a sharp appreciation, etc., coming in the HDFC Bank, but it will be a long term winner, and that's where the money is going to be. HDFC, Axis, etc., Yes Bank, etc. You will probably see money moving into a lot of these institutions.
Good talking to you, Sreesankar. We'll leave it there. Thank you so much for joining us today. Sreesankar from Prabhudas Lilladher. Up next,